Turning to monetary policy, the OPR was kept at its historical low of 1.75% last year. This was to maintain support to the economy as the pandemic persisted. For 2022, monetary policy will be focused on facilitating a sustainable economic recovery while preserving price stability. This includes ensuring that the degree of accommodation is consistent with the improving economy. While we do expect economic recovery to continue, the highly challenging operating environment does add a layer of complexity in assessing the balance of risk to inflation and growth. So given these prevailing and significant uncertainties, the stance of monetary policy will continue to be determined by new data and information. Ultimately, should the economic environment warrant monetary policy adjustments, they would be gradual and measured, so to not disrupt the recovery process.
We have got a couple of questions from, I think, from Bloomberg and Berita Harian. And the question goes something like this. Is it a good time to raise OPR at all, given that the inflation that we see right now is mainly conflict-induced rather than demand-driven? Also, there's a question on if we were to high OPR, would it derail our economic recovery? And will we ensure that the OPR stance remains accommodative? Governor, over to you.
As what I had mentioned in our fourth quarter GDP press briefing, while we will continue to do our part in managing demand-led price pressure, the price, like what you had, most of you had pointed out, the price increase we see today, mostly due to supply-driven disruption. So this may not necessarily warrant a monetary policy response, given monetary policy role as a demand management tool. So the bank's policy alone will not be sufficient to address the higher costs from these supply disruptions. It needs to be tackled through comprehensive and coordinated efforts by the government and also the private sector. Nevertheless, we are closely monitoring for signs of potential second-order effects as to whether price pressures could become entrenched and reinforced by domestic demand factors. As what we have stated in our latest MPS, we do consider the current monetary policy stance to be appropriate and accommodative given the prevailing outlook and growth and inflation for this year. And we intend for it to remain accommodative going forward to support recovery and ensure price stability. However, we also recognize, as many other central banks have, that the unprecedented conditions that warranted the significant monetary support during the height of the pandemic, it is almost over. So with the policy rate at its historical low, we are mindful of the consequences of keeping interest rate low for an extended period of time, which could lead to an unhealthy build-up in financial imbalances. And we will balance all these considerations. We will ensure that any potential adjustment to the OPR will be data dependent. Any adjustment to the OPR may also mean that we are confident that we are on a firmer growth trajectory.
Thank you, Governor. We are still within the realms of OPR. The next question is that we got from Jason as well, and other media. But just to paraphrase it, both the US Fed and Bank of England recently hiking rates. How would that factor into our MP stance? And are we a little bit worried about the interest differential?
Mm-hmm. Well, we conduct our monetary policy from premise on achieving price stability and sustainable growth in Malaysia. So while we do consider global developments, we assess them through the lens of whether they affect the balance of risks on our inflation and growth outlook. As far as impact on our financial market is concerned, our financial markets have shown continued resilience amidst all these developments. For one, like what I had said earlier, our ringgit movement is broadly in line with regional currencies. And I know my colleagues here have shown the chart here. And the volatility, you can see from the chart, have remained quite subdued, around 4% to date. And this is around the same ballpark number as last year. If I recall correctly, it was close to about 6% in 2020. So, in fact, the ringgit movement was relatively muted, as seen from this new chart also, against the dollar when the Fed hiked its rates mid-March. And when we look at our MGS yield, while it did adjust upwards, the movement has been orderly and in line with regional peers.